January was an amazing month in the stock market and things seem to be going well without stopping. However, February was a little different, and in this video I'm going to share with you my Freetrade portfolio. So without further ado, let's get straight into it. So the value of my general investment account is £27,437, and over the past month we can see that there was a steady incline with a considerable decline. So at the peak my general investment account was 27,885, and in this video I'm going to share with you my holdings and my strategy to maximize my holdings in my Freetrade account and how I'm going to do that and the risks that I'm going to take along the way. So just to overview my maximum investing journeys, Freetrade was my first investment account, or first proper investment account. Started on the 19th of April, had a peak of around £36,000, and then I started knowing about ISAs and putting my money into the ISA, and since then, after filling up my ISA, I have been consistently investing into my general investment account because there's no other place I could have put my money. So the goal is to kind of incubate my money in my general investment account, and when the ISA year starts, just to lump it in there in one go. So that being said, I have stopped depositing within my Freetrade account, so this month I did not deposit anything, but even then my account has been going up around £2,000 to £3,000 per month, and I really want to explain how. So in the whole range of time that I have invested with Freetrade, my general account is down by £1,952. Now this figure at its peak has been down by 5,800. So me looking at 1,900 is almost like seeing green plus 10,000 for me. It looks very good. So let's quickly go through my holdings and see the state of the mess that I have. So Intel, I have a very small amount, and that is down by 49%. CSN, I have 1.7 shares, and that is down by 22%. The iShares World Dividend is up by 6%, I can't complain. Gap seems to be very volatile, and that is currently up by 2.92%, so not bad, but all these holdings are very small anyway, so we can go over them quite quickly. Kyndryl is always going to be stable because it is a stock derived from another stock. Xinhuan Real Estate is doing actually pretty well over the past month, and that is up by a massive 69%. If I had believed in this company, I would probably be investing more when it was low, but I don't think I have any faith in this company. When I started investing into random companies without looking into their financials, and I don't think Xinhuan Real Estate really is a company that I should be investing money in at this present time. So Rolls-Royce has been having a crazy ride. So over the past 3 months it's been doing incredibly well. Over the past month it hasn't been doing so well, and one of the top people at Rolls-Royce has actually admitted that Rolls-Royce is a burning investment, which has sent the stock down quite a bit. So it is one of those stocks that people aren't really sure about its future. However, I do think in the long term Rolls-Royce is going to be a good option, especially with aviation starting to take off, no pun intended. But I do think that aviation is not going to take off straight away. I do think it's going to take about 5 years for aviation to kind of go back to pre-pandemic levels or exceed that. But I do think Rolls-Royce is going to be a groundbreaker in technologies of probably something else before it gets back into aviation. They are working on investing into a lot of different products. They do have the name Rolls-Royce and a lot of backing behind them, so I think Rolls-Royce is fine, and at £1 I don't think it's a bad buy. Avaya Holdings is a roller coaster, honestly. Over the past month it's been up by 14%, past 7 days down by 25%. So yeah, I actually bought more holdings in Avaya Holdings. So originally I had around 43 shares, which I bought for £900 back in the peak. Now I've bought literally more than double that for around £15. So we'll see where Avaya Holdings goes. I could end up losing all my money, but I'm not going to put any more money into Avaya. If it goes up, it goes up, happy days. If it goes down, I guess I have already accepted that I could lose all my money in Avaya. And honestly, some of my other investments are doing so much better that I don't need to worry about £900 loss anymore. Saturna Al Kauthar down by 10%. I have no idea what that fund is, but I bought it. ESG Global is down by 2.7%, not too bad. Aston Martin, since I bought it, down by a massive 91%, so that's £763. Remember how I said my maximum portfolio was down by 1,900? This is almost half of that, and you'll see through my other stocks as well, I've lost so much dealing with individual stocks. If I hadn't invested in any individual stocks, my general investment account would be up by around £6,000, which would be incredibly well in this current climate. Clover Health is down by a massive 90%, so that's another loss of £809. 700 plus 800, we're looking at already £1,500-ish. It's just crazy to see how much you can lose dealing with individual stocks. CrowdStrike is down by 43%, not too unhappy because this was a free share. AGM Holdings, another massive loss, minus 84% still. That is a loss of £757. So we've already covered minus 1,900, and everything else that I've invested in that's gone down is just going to add more and more. That just goes to show how by changing my strategy, I've made so much more money that I can now cover some of my losses. Cognite Software, another massive loss. So that's a £753 loss, minus 84%. Fastly, yet another massive loss, minus 81%. So that's £730 loss. Albert Mineral, yet again I'm just laughing because that's down by 52%. That's a £490 loss. One Life, £431 loss, minus 48%. Alibaba actually has been doing really weirdly over the past 7 days, 7 months, 3 months. So over the past 3 months, it gained 45%, and in the last month, it lost 8%. So I don't know what's happening with Alibaba, but there was a slight recovery, which I'm happy about, and that is down today at £474, so that's a £47 loss. Corsair is down by minus 41%, that is a £409 loss. However, over the past month, it has gained around 21%, which is very good. Shoals is a company that is a solar company, and it has been incredibly volatile. Over the past 3 months it's been doing well, but over the past month it has lost around 5%, and that is down by 22% in my portfolio. That's a £200 loss, which is not too bad in the grand scheme of things. Beidou has actually been doing really well because I saw it go very close to my selling point. Actually, I do think it was in profit, but I just thought Beidou in the long term might actually be worth holding on to. Now I'm reconsidering, I might just take a small profit and just sell and be out of individual stocks altogether. But in the past month, it's been doing okay. Past 3 months, it went up by 50%, so it's not too bad. That is £128 loss, and that's 14% loss. So Metro Bank, my only green in the portfolio, which is really funny, that is up by 3.85%, so that's a £30 gain. I'm not too sure what to do with Metro. Realistically, I should have kept dollar cost averaging into this because in the past 6 months it went up by 60%, past 3 months 50%. So it's doing really well. I do think there's a lot of headroom for Metro Bank, so I'm going to hold it for now, but I might be tempted to sell it. So the way I do manage my investments, this is my general investment account. So this is a waiting shop to get into the ISA. Any surplus that I do have, obviously I can't put into my ISA after the limit is done. So I put it into my general investment account with the hopes that I'll get some small capital appreciation ready for the next ISA, or them being positive, even a small amount, and I can sell whenever I need to into my ISA. That being said, I do have this holding with over £20,000. When the ISA year starts and the limit is the same at £20,000, all I have to do is just sell £20,000 worth of that holding, and I'm done for the ISA, and I don't have to worry about anything else. The surplus then goes into my trading 212 account, which I'm not going to deposit any more into my Freetrade account, and then the same thing happens again. It's like a waiting list, some capital appreciation that gets sliced into the ISA. So speaking of my strategy, let's look at what I've been doing. So I've been buying the GSPX as usual. I don't recommend this, and I can say 100 times I do not recommend this, but I'm trying to have fun, and this is my money, this is my investment. If I buy it at a price and it goes down a lot, I'll just buy more. If I buy at a price and it goes down a lot more, then I lose out on potential money. However, I don't actually lose out on physical money, as in money's not taken away from me. This is a risk that I'm willing to take because I think in order to make the most out of my ISA, I'm going to have to make some risks along the way. And just the sheer volatility of the S&P 500, I am positive that no matter what amount I buy it at, it's going to go up and it's going to go down. That always happens. Of course, the worst case scenario is I buy, let's say, at £7 and it goes to £9 and it stays there forever. Obviously, I've lost thousands and thousands of pounds, but you know what, I'm willing to take that risk. But anyway, I've been doing a lot of buying and selling, and overall it has actually been doing very well for me. My previous buy was not the most successful, so it's down by £72, but I'm not worried about that. If we go into the insights, I can actually show you what I've been doing compared to the All World ETF, which is basically the whole stock market holistically. So you can see that using my strategy, I have been avoiding big dips, but of course some dips are unavoidable. But overall, in the past month, I have been outperforming the market, as I have been doing for quite a while. Over the past 3 months, yet again outperforming the market, and over the past year, again outperforming the market. That is not to say that I'm going to keep outperforming the market. That is within my own risks that I'm taking, and essentially, like any other investor, I want to have the most amount of money in my investments so that I can retire early or have my own financial independence and my decisions not based on, you know, having to work for an employer. That being said, I do not recommend doing this. I think the best way is dollar cost averaging, and as I'll show you from my ISA and my strategies, what I'm doing is actually a zero-sum game. It is essentially, if you do all the maths, it is dollar cost averaging, but more gamified, meaning that, you know, I'm selling at one point and then I'm buying again. Essentially, it is dollar cost averaging, but let's get into my ISA. So I'm actually really happy with my ISA. My ISA currently stands at £48,557, and this is 2 years worth of maximizing ISAs. So it's very easy math. My gain is £8,557, and at the peak, my ISA was 49,539, and if I had stuck with my gut, I would have been up even more, but I kind of went greedy and tried to hold on for a bit longer. That is fine. It is still fun for me. I don't really mind losing money. It is just a choice with my own money, what I like to do with it. So as you can see, it was considerably high on Thursday, and then the stock market kind of dipped, and then it kind of recovered a bit. So at this point, I was £9,500 plus, and now I'm 8,500. So I lost around £1,000 in potential gain, which I'm okay with, because now I'm still in the market. As you can see, I have 6,786 shares of the GSPX, which is very nice amount of holding to have. The current value is 47,481, which sounds crazy to say, but I do have that many shares in the GSPX. Quickly, just to go back into my general investment account, I have in this account 3,121 shares in the GSPX. So overall, I have around 10,000 shares in the GSPX. And that is the basis of my strategy, which I admit is a full strategy, but every pence the GSPX goes up by, that is a £100 profit for me. So I know how volatile the GSPX is. So all I have to do is, regardless of where I buy, if the price goes up by 1 pence, I've made £100. If the price goes up by £1, I make £10,000. So I think when the times are volatile and the price is around £7 or less, I can afford to buy another 10,000 no matter where the price is, and wherever I buy it, it will go up a bit and then it will go down a bit. So I'm just trying to make the most out of the volatility. With that being said, when the actual bull market does come, I can't really be doing this again. So I think this is prime time to make the most out of people's greed, because they want more returns. They want to buy when the stocks are low and they want to sell when it's high, and essentially they're the ones that are creating volatility, and someone has to exploit it, in my opinion. So the other holdings I have in my ISA, Albert Mineral, I have 2,400 shares, that's down by 47%. Master Energy is down by 83%. Again, not a big holding. Amazon's up by 16%. Rolls-Royce is up by 56%, which is really, really good. FTSE All World High Dividend Yield, I have only one share, and that is up by 4%. Avaya Holdings, I actually bought the initial amount for a very good price. So I bought for 15.8 cents. That is currently up by 38%, but I've seen as high as 150 because it's incredibly volatile right now. Aston Martin, 49 shares. So I bought the entire amount that I bought in my general investment account back when Aston Martin was very, very low, under £2. And currently I am up by 22% in that. I have 2 shares in the Vusa, which I might sell because I don't really deal too much in Vusa anymore. However, that is up by 1.5%. So the thing with the Vusa is it is not volatile in the same way as the GSPX is. The changes are not as drastic, which could be a good thing for long-term investors, but currently I just want to make the most out of GSPX. Disney's been doing well over the past month with a 10% increase. That is down only by 14% for me, so that's a £46 loss. Lastly, Meta, 3 shares, and Meta has been doing incredibly well over the past 3 months with a 50% gain, and that is down by only 18%, so that's a £95 loss. In terms of performance, for the past month, I have beat the market by around 23%. So of course, I've been taking huge risks with the GSPX. Most of them have been paying off, and I honestly do think, like I said in my last video, I've made enough returns off the GSPX for an entire year's worth. I do think the stock market is going to go in for a bull run soon, and I kind of might miss out on that, but it's fun for me. It's more fun than anything. If stocks do go down, that gives me more incentive to earn more money and put in more money into a separate ISA or separate general investment account. So for me, if the stocks go down, that's absolutely no problem. The only problem that I will have is if the stocks go up. But that being said, I'm currently in the market. I have 10,000 shares in the GSPX. With that being said, I'm still in the market. I have over 10,000 shares in the GSPX, and I'm looking forward to what the stock market brings in the future. So make sure to check out some of my other videos, and I will see you in the next video.